Good morning, traders. 1 minute late. Sorry. Friday, the 22nd of July. James Thorpe stepping in for Steve Miley. Steve's going to be back on Monday from a warm Chicago, but I don't think we're as warm as you guys are in the UK. So, anyway, let's get started. Good morning for our US traders. Good afternoon for our European traders, and good evening to our Asian traders. And good morning to Tony, who just fired in. Has the meeting started? Sorry, Tony, we were a minute late. Traders. So I mentioned yesterday that Canadian futures trader on YouTube, somebody we did an interview with, a founders interview with a few days ago, has actually signed up for our evaluation challenge, and he's making his way through it and posting daily on his progress. And day two was yesterday. Day one, he lost money, but had the discipline to walk away. And day two, I actually haven't worked my way all the way through the video, but looks like he's going to have a good day. I'm just highlighting it because I think there's actually some pretty good. Actually, it's not that I think. I know that there's actually some very good trader mind going on here, that you can, like, there are lessons to be learned and things. Certainly this first trade that he makes yesterday, goes on side, and he uses a trailing stop to protect his profits. And it was a very good, it's a good way of good illustration on how you can use a trading stop to protect your profits. So, head over there, watch the Canadian futures trader. I believe he has a good day. Watch his second day, see how he trades, and we're going to be watching his progress in the over as he goes through the challenge. So let's have a look. Today's economic calendar is light. We are post ECB. The ECB hiked rates yesterday for 50 basis points, 0.5%. And I think it was a really good, solid move by the ECB. The expectation was a bit of a coin flip, where they're going to do quarter a point or half a point. But I think a half point was, generally well received by the market. Inflation is a problem, it's growing, and I think traders took a little bit of reassurance out of this sort of confident move by the ECB. They also announced their anti-fragmentation tool, although people are still trying to kind of figure out, sort of really what it is, and when will it come into place. And they're watching right now the sort of BTP Bund spread, which is the Bund are the German government bonds, but really the bellwether for European bonds. And Italy bonds are the BTPs. That spread seems to be blowing out at the moment, largely around the political turmoil in Italy. President Draghi resigned yesterday, or it was it was yesterday morning. So there's a little bit of uncertainty what's going on, and so the ECB have announced this anti-fragmentation tool to try and hold the eurozone together. I mean, really just try and bring more confidence back into the eurozone and into the euro. I think the euro continued to weaken a little bit yesterday. Biden has got COVID. Thankfully, he's doing okay. But nevertheless, that was in the news this morning. Aside from that, there wasn't really, much out on sort of like the sort of global geopolitical landscape. Um, in terms of earnings reports, Snap reported yesterday and actually shed billions of dollars in value. I think at one point they were down about 28%, and that dragged Meta or Facebook down 5% and Google down 2.5%. And that's really just investors trying to figure out how the economy and the uncertainty around, are we heading into a recession, is impacting ad spending. Obviously, the main revenue drivers for these internet platforms. So we're watching, or investors are watching that, and Snap, didn't report good earnings anyway. On the earnings calendar, actually going into today, we have Verizon reporting. That's a slight miss, but American Express and HCA are positive. and we've got Twitter reporting today too. So Twitter's going to be interesting given everything that's going on with Elon Musk. So I'm watching that closely. More just out of interest, really, than sort of market impacting. Generally speaking, the earnings reports have come in better than expected. Going into earnings season, I mentioned it yesterday. There was some nervousness, and if I just pop over to the charts quickly. Um, there was some nervousness. This is the it's the Nasdaq. This is the S&P, and we were kind of like, are we going to sort of? We were kind of around here as we head into the earnings season. Are we going to be missing in a lot of companies? Is the have we overestimated the resilience of the U.S. economy? But actually, a lot of these companies haven't been too bad. And a lot of them have beat expectations. And I think that has generally sort of helped to fuel this upward trajectory in U.S. equities. Let's go back to the daily calendar and see what's out today. So this morning in Europe and in the UK, we had a lot of PMI manufacturing numbers, and we could see it was a miss across the board in Europe. But actually, the UK did a little bit better than Europe. These aren't sort of big, improvements, but they're not big misses either. So it's kind of a relatively mixed bag. In the US, coming out today, there isn't a great deal. There is a PMI in the US, and that's coming out at manufacturing PMI at 945. Um, excuse me, a little bit parched. And we're expecting a reading of 52. So we'll be watching that, but it's not a big number, or certainly not a big focus for us at the moment. So I think we're in for a relatively quiet session. We're going into the weekend. We've experienced sort of firmer stocks all week, so I expect potentially some profit taking towards the second part of the session. But we'll have a look at the charts in a moment. That's about it. There isn't a great deal out today. As I said, we looked at the earnings reports. When we go over to Reuters and look at the headlines, what I'm looking for really is sort of news that's going to impact price or maybe set the tone for the day and drive it. And like this is what they're leading off with the latest market news. Fertilizer cargo ship from Russia heads to the US as many worry about food shortages. It doesn't really feel like a market moving headline, does it? Good morning, Blaze. Thanks for joining us. I look down here and I don't really see much in the way of, market moving news. If you're an oil trader, oil prices fall as Libya resume output. We can have a look at the chart on that in a moment. We saw certainly a bounce off that important 200-day moving average support around $94 to $95 yesterday that we thought we might see, but it wasn't easy. It tested us. It rallied up into the area where we thought it was going to rally, but then gave back all those gains. So it's a tricky day in oil, but oil prices fall as Libya resumes output. Global demand outlook darkens. So this has really been the driver of oil price in the last few weeks. Has been the darkening sort of outlook of the global economy as people are starting to fear recession more, and and inflation has been stubborn. So central bankers around the world are having to take more of an aggressive stance with monetary policy, and people thinking, well, that's definitely the focus, get inflation under control, but at what price? It's going to slow output in the economies. So oil prices fell on Friday, weakening global demand outlook and the resumption of some Libyan crude oil output. Let's see if there's anything interesting in this article to pick out. Global economy looks increasingly likely to be heading into a serious slowdown. Thanks for that, Sherlock Holmes. Still negative on the economic front. There's nothing really new or surprising in this story. So head over to Forex Live. Again, looking to sort of pick out headlines that I think are going to set the tone for the day. And there isn't much here. Just looking through. There's a little bit of talk about what's going to happen at the next ECB, but we can see here some of these ECB members are already starting to talk about it is possible to expect 25 or 50, but let's kind of like wait and see. ECB is the cost. We will see about September. We are data dependent. So, I think the ECB was like, bang, we're going to do 0.5%. Let's send a signal to the market that we're serious about controlling inflation. Let's take a serious step towards it. But we're very much data driven, and let's see what the data tells us now between now and the next meeting. So very interesting, not very interesting, but it makes sort of a logical stance, right? I've got a message here saying streaming offline by Tony, but on my side, it seems it's still up. If anyone's there, anyone else is watching, can you confirm if you can see it or not? Um, Tony, maybe refresh your screen. I'm not sure if you can hear me if you think the stream's offline. I'll keep pushing forward because everything seems fine on my end. And looking at the Bloomberg headline again, it's kind of like, look, US futures slip on earnings, jitters, bonds climb, market wrap. So this is just a sort of a July 21st at 5:25 p.m. So this is kind of like later in the day yesterday. So it's not really counting in what's happened overnight, but essentially sort of talks a little bit about equities sort of softening into the sort of evening session just based on some of the earnings. But when we actually look at the charts here, we can see here. So I'm looking at the E-mini. This is the daily, and nice continues the uptrend. It like kind of re-established, or not re-established, but tested yesterday's high and made new highs like we thought it would. But it wasn't an easy trade because I believe looking. I remember looking over it at one point yesterday morning, and it had started to sort of break and test the highs, but actually failed and fell away before it made that forward advance. But interestingly, it did sort of soften towards this trend line and bounce off this trend line before it went on to establish the new highs. So I think the bull market's still in. The question is, how much higher will it go today? With a lack of real market data, going into the weekend after sort of a 3 or 4, 5 days sort of bull run, we might see some profit taking. So I think we're in for a quiet session. But I would play it from the bull side. It's just that I don't know how much it's going to extend this bull run, given the lack of drivers, fundamental drivers in the market. Looking at the Nasdaq, it's a very similar story. It's trending nicely, bouncing nicely off this trend line. It doesn't it feel a little bit like we're in for a period of consolidation. This is going to sort of negate this trend line. I don't think it's going to sort of collapse through, but it might sort of, somewhere between this high that's been established and this low, we might sort of sit today. If we're lucky, we might get a small test of this and a small break above, but I don't think we're going to see a huge rally again, because of the lack of drivers and news in the market. Looking at the treasuries was interesting yesterday. It definitely held this technical level of support, but broke this level of resistance, consolidated around this level here, and broke this one clearly. And now it's kind of just sitting around this level of resistance here. Um, you know, Again, a difficult trade, but certainly for something that drives like that in that one direction, as equities are moving up too. There's normally an anti-correlation there, but I think there was some good opportunities in there. Certainly, Canadian futures trader was talking about it on his channel that it was a good market for him to trade. And then looking at oil, sitting in its downtrend, continuing in its downtrend, This is the area that we talked about yesterday. And in fact, we were talking about it around when it was trading around here, being, I believe, on a 200-day moving average. So technically a good level of support around 94.50, 95. And a nice bounce off it, but a very difficult trade nonetheless. We thought it might get up towards these levels of resistance, which it did, but it's it didn't hold and it's fallen away. This is probably largely due to Libya delivering more oil, or turning back on delivery, and in creating a little bit more supply in the system. We can have a quick look at gold. Gold caught a bid yesterday. Well done, gold. I'm not a gold trader. We have a couple of people trading gold on the platform, and they're doing okay. I find gold a very difficult market to trade. Going into yesterday, it was in a firmly in a bear trend, but I guess we'd had a very good candlestick yesterday, which had day before yesterday, which probably signaled maybe some sort of level of support, and it extended up from there. But it feels like a very difficult market for me to sort of one, comment on, and to certainly two, trade. So I'm just going to leave it there. So look, it's 6:47. It's a 27-minute meeting for me. It's normally much longer. But there really isn't that much out overnight. I do encourage you to go over to Canadian Futures Traders channel and have a look at his or follow his progress. But start with the video. I mentioned it yesterday, but for anybody that's listening new today, start with the video. That is, you can watch obviously Steve and I's founders video if you're interested. But the second video where he signs up to Trade Day, that's worth taking a look at. And the reason why I say that is it's not the process of signing up to Trade Day that's important. It is the second part of that video where he takes a look at our evaluation and sets his game plan down. He puts it onto a whiteboard, but he shows you it on the YouTube channel, how he thinks about his trading, how he thinks about his risk management, what he's prepared to lose in a day before he stops trading, what is looking to make in a day, to make progress in the challenge. And he talks about his win rates and his kind of like risk reward. And I think it's a really good sort of like overview or insight into a trader's mind. And the other thing he talks about that I really like is he talks about thinking in ticks, not in cash. Right? Very, very important. I encourage you to go and take a look. Now, a couple of things I want to mention before I wrap up the meeting. So if we look at our our website, in the footer, there's an FAQ, link to our FAQs at tradeday.com. Guys, we get a lot of email questions, support at Trade Day and info at Trade Day questions. That can be answered if you just took the time to go over to the FAQs. Now, we're happy to answer them. It's just those answers are there in the FAQs a lot of the time, and you could get the answer much quicker. Now, you feel free to email us. We will respond. Of course, we will respond. And sometimes, you need more color than the question in the FAQ, or it is a question that we haven't answered in the FAQ. But if you go to the FAQs, you'll get your answers quickly a lot of the time. All right. So if you've got a question, FAQ, and also let's say if we go to the evaluation dashboard, occasionally we get questions specifically around the evaluation. These are links to the FAQs. So, can I trade X product? Available products to trade. Can you tell me a little bit about position sizing? What is the position limit rule? Click here to learn how we define an open position. Right, so we try and make it very easy for you to navigate around our site and get your questions answered. Look, very happy to answer them on email. All I'm saying is, it takes us time to work through them and get to them sometimes. And when you can find the answer very quickly by navigating to our FAQ site. So that's one thing. The other thing is something quite exciting is coming down the pipeline. Micro mini equivalency. So a lot of questions around this right now, and the reason why you can't on the beginner you can trade a two lot maximum position, right? And that's either two lot micros or two lot minis, not 20 lot micros at the moment. And the reason why that is it is the limitations on the Trader 8 simulated market. So it's not a problem when we fund you, it's just an issue when you're on the evaluation, and it's to do with the limitations of the Trader 8 software. So they allow us to set like two limits in micros, or limits in minis, or both, but not the equivalency. So what we're doing is we're doing a software development a project within our middleware that manages risk that's going to allow us to grant you the ability to trade two micros or up to two minis or up to 20 micros, or if you're on the advanced, four minis or up to 40 micros. But we're working on that at the moment. The development team are doing it. They think it's about 2 weeks away from completion. My experience with development work is it tends to go on a little bit longer than we all hope. So, but we are hoping to roll it out within the sort of first week or two of August. Okay, so we are working on it. Please be patient on that. We get a lot of questions around that, but it is coming down the pipeline. So very exciting, a new update for trade day. And as George rightly points out there, micros allow for the scaling in and out of positions. Yes, you're absolutely right, George. We have a lot of traders that are wanting it, and we have a lot of people who aren't on our platform who said, "We love what you are doing. We want to join you. We just want to be able to have the ability to trade 20 micros." So, it is a priority for us. We are actually working on it right now, and it is coming down the pipeline. The second thing that we're going to announce very soon, and this is a very this is a first announcement of it on our site, but we're going to make it official and build it into the site, is Orderflow Labs. We are partnering with Orderflow Labs, orderflowlabs.com. Now, a lot of you may already know Orderflow Labs. Some of you may not. So, who are Orderflow Labs? So, I'm reluctant to say they are a signal generating software, because I don't. Steve and I both feel very strongly about sort of signal generating software, because what tends to happen is people, buy this software expecting to be able to make money. Oh, the signal's a bull signal, a buy signal. I'm going to buy it. Signal's a sell signal. I'm going to sell it, and I'm going to make money. Of course, we all know that's not how trading works, right? But Orderflow Labs, Steve and I love these guys. We've been meeting with them now for about sort of 3 months, discussing how we might be able to work together. Orderflow Labs have a set of tools that really help you get into a trade and sort of stay into the trade and stay in the trade, give you sort of confidence in your position, and help you, like stay in that trade, give you further confidence as they can try and give you insight in what's going on with order flow and what's going on, if you like, within the candle. Now, we're going to be sort of publishing some of their material on our site, but what's happening is, as a first step with Orderflow Labs, is that we're going to be able to offer our traders a free trial. Now, Orderflow Labs don't do free trials, and I think it's about $200 a month as a package. But what they're going to do is for our traders on the evaluation, just as a first step, on a long journey that we're going to have with Orderflow Labs, hopefully. But just as a first step, what they're going to do is we're going to give traders on our evaluation a sort of a free look at their studies and a free a whole month in their Discord server where they hang out and trade all day long with their community. And so you can take a look at these tools and see if they can help you, right? They're not going to help everybody. But I'll tell you this, when I saw this software for the first time, I was blown away. I thought, wow, they've managed to articulate, quantify, and sort of develop my experience in trading, how I look at the markets, into a set of tools. and it's really really interesting stuff. And we are super psyched to be working with them. As I said, I'm going to build out a page on our site so you can learn more about them over the weekend, and hopefully that will be ready Monday for you, and some videos where you can sort of watch them at work, and learn about the different types of studies and tools that they've developed that help day traders. And the idea is, as I said, we can give our traders a minimum of 30 days, look at these tools for free, and then if it's something that you think can help you with your trading, exclusive discounts to trade day. Now, what Steve and I have said to them is, we don't want any commission. This is not how we're setting it up. This is more of a partnership. They're not earning commission from our traders that go to them. Sorry, we're not earning commission from our traders going to them, and from their community that want funding. They're not taking the commission too. We're just passing those savings on to our traders. And as I said, you cannot get a free trial with Orderflow Labs, and their discounts are rare. But we're going to be able to offer you a free trial and a significant discount if it's something that you want. Right? It won't be for everybody, but it might be something that can help your trading. And we think they are probably one of the best set of order book tools that are on the market today for day traders. So if you want a quick early look, go over to orderflowlabs.com and check them out. That's it, guys. I'm going to wrap up there. I think a relatively quiet session, maybe an extension of the bull rally. Oh, look, it's oh no, that's gold. I thought, let's have a look at the stocks. Maybe an extension of the bull rally. Looks like we're sort of pushing a little bit higher in the session right now, but be careful because it is Friday. We're coming off this 1, 2, 3, 4, 5, 6 day rally. There might be a bit of profit taking that's going to sort of quell any sort of rally. So good luck, stay safe, and we will see you Monday.